If you've been watching my channel, then you're going to know one of my favorite platforms for investing in real estate online is a platform called Lofty. This is a blockchain-enabled platform. They actually do use the Algorand blockchain, but you don't have to be in any way associated with blockchain or crypto or anything like that to invest in Lofty. One of the nice things about Lofty is you can invest for less than $100 per share of real estate. Now, this is actual real estate. This isn't like metaverse real estate or imaginary real estate. These are actual properties that you can invest in. In today's video, I'm going to show you 3 properties that you can directly invest in. Small dollar amounts if you want. Just say $100, you just want to dip your feet in a little bit to get invested in real estate. Or if you want to put a lot more, obviously you can put thousands of dollars in. And you can participate in the market of what's going on right now. Prices are not going down. They are stabilizing a little bit in the marketplace out there. But as interest rates are dropping, which they are doing now, we're going to see prices probably stop falling completely. I mean, it's definitely, real estate, there's no sort of average price across the U.S. There's not even an average price in a town. There's not even an average price maybe in a neighborhood. Prices can differ across the street from each other. There's a lot of variables that go into real estate pricing. So, but as interest rates go down, that just means that there's more buyers that are going to be able to buy. And we are seeing interest rates going down right now. So that means the people that have been waiting on the sidelines because interest rates were spiking, they're definitely going to be coming back into the market. We're just not seeing any sort of a wholesale crash in the market. That is just really not in the cards at the time being, really at all. I know there's a lot of videos on YouTube about real estate crashing because that gets a lot of clicks, but it's just really not happening. You would need to see a massive spike in unemployment for real estate to really start going down. We're not seeing that massive spike in unemployment. We are seeing good numbers. I mean, there was some news in the last couple of weeks that the government was lying about unemployment numbers. Okay, I think they were lying of about 1 million jobs were created in the last year, but you're talking 160 plus million workers in this country. That's less than, that's way less than 1%. So you would need to see a wholesale spike in unemployment numbers before you start seeing people getting out of their mortgages because they can't afford them anymore. I've talked about this on my channel before, that you have a lot of people that are locked into very low interest rate mortgages. So for those people to need to tap into their equity to survive, basically, is why you would need to see a huge flood of inventory. Those people have no incentives to sell. And so you would need to see, a spike in unemployment. Then those people are sort of forced to sell, and we're not seeing that right now. New construction numbers are solid. Resale numbers right now are pretty solid. If you're looking at averages, I mean, your neighborhood might be different. My market, we're doing pretty solid right now. We're still seeing, high offers. We're still seeing short days on market. So it's always a good time to invest in real estate. Plus, if you really do believe there's going to be this everything crash, everything goes down, well, I'd rather be in real estate than I would be in equities or stocks. Real estate recovers. You're actually owning something. You're owning real properties. You're getting rents if you're investing in rental properties. So not only do you own an asset, but it's a business that's generating income. So back to Lofty. There's 3 properties I wanted to show you guys that are showing really good returns. And let's just look at them. Let's jump right into that right here. Now here is basically the marketplace for Lofty right here. Now, one of the things I wanted to tell you is that not only can you invest in just like tokenized, fractionalized real estate where you own it, but also I have a program, and I have a video on my channel about this, how you, if you're a homeowner or an investor, so homeowners can tap into their equity and we can invest in the equity of current owners. And the owners can still maybe be living there, or maybe it's an Airbnb or a rental property and they're going to be managing it, but they have a ton of equity and they want to make some cash on their equity. We can invest in that equity and get a really high return on our investment. So here is the marketplace for Lofty. You can see there's a lot of properties here. And then the 3 I wanted to show you today, let's look at this first one here. Let me just click on it. So this one's in Lubbock, Texas, 15 Wilshire Boulevard. Now you can see the token price has been going up a little bit. They started down here, they hit down here at one point in early August at about 45. Then they peaked at about 57. That's where basically it is right now. They're estimating your annual rate of return at 17.67%. The rental yield at 16.27%. So let's take a look at this property. First, let's just look at some pictures. Now, this is a pretty nice house. I like it all brick. I know you have a lot of brick houses in Texas. Nice kitchen. I really like these finishes. I like that kitchen. I actually like that dining room table a lot there too. Looks like they have a bedroom right off the kitchen. I don't know if that's the primary bedroom. We're not allowed to say master bedroom anymore. It's primary bedrooms. So clicking through here, I like the open concept. I like the neutral colors. I like the open kitchen. Now we're into some of the bedrooms. Okay, I like this. I like this property. Whether it was a rental or if the homeowner was going to be staying there, someone that keeps their property this nice is probably going to keep keeping it this nice. Now let's just take a look at some of the pricing issues here. Single family house located in Lubbock, Texas. Austin Hughes with Thunder Sun Homes transferred his property's deed to a new LLC and is selling a portion of the LLC on the Lofty Marketplace. The property is the only asset owned by the LLC. Tokens represent direct ownership in the LLC that owns the property. Austin will maintain at least 10% ownership in the LLC indefinitely. So the owner is still invested. He has an interest in keeping this property up. We can view proof of Austin's ownership prior to the title transfer. You can click on that here. You can view the LLC documents here. It's one of the things I like about Lofty is they're very transparent about the documents. I'm not going to go directly into these on this video. I think that gets pretty boring when I start reading detailed documents. I've read them. I like what it's saying. So, discover a prime investment opportunity. Single family home nestled in a gated community, luxury, comfort, stability, 3-bedroom, 2.5 bath, 2,500 square feet, open floor plan, high ceilings, modern amenities, tenant occupied. Enjoy immediate rental income with reliable tenants currently paying $3,000 a month. So that's pretty good. Why invest with Austin and Thunder Sun Homes? They have a proven track record of managing 532 rental units. That's a decent sized little property management company, doing a mix of houses, duplexes, and multifamily and mobile home parks. Professional management by the owner. I like that. Invest in a property that not only offers luxury living but promises stable, impressive returns. Okay, I mean, that's kind of salesy talk right there. Then they have some information here about the seller. If you want to read on that, let's drop down here. Property management is going to be done by Austin Hughes with Thunder Sun Homes. I like that. We can view the property management agreement. Austin, the property management, okay, so per the seller, Austin, the property management fee will be set at 30% of the rental income. This fee structure is designed to help the property owner make debt service payments while still providing real excellent yields to the investors. By ensuring that the property manager has the necessary resources to effectively manage the property, they're able to bring high quality properties like this to the Lofty Marketplace. Great. The management fee drops to 10% of gross rental income once the loan is paid in full. Now remember that 30% is including the debt service. Then you can look at the insurance policy. The property has a loan balance of $344,000. You can view the documents here. As the seller, Austin Hughes pays 100% of the loan payments. His equity percentage on the property will increase and the levered rental yield of investors will decrease over time. Investors have the ability to change this structure via governance vote. So that is one of the things on Lofty, that this is a tokenized real estate investment that the owners, the tokenized owners like us, if we're buying into this, that we have a governance vote and we can help make decisions on how this property is managed. They have a 1-year lease at $3,000 a month. They've got an A+ rating on zip code on niche.com. And you can look right here at the appraisal, inspection report, operating agreement. You can look at all that stuff right here. Now, looking at the investment, the underlying asset price is $400,000. Closing costs, $1,300. There's a Dow fee for paperwork of $650. Operating reserves of $1,100. That's really nice right there. So this is the annual projected rate of return at 17.66%. Based on the projection of rental yield at 16.27%, the appreciation of 1.4%. We'll see. It could be better than that. That's just what they're projecting. Gross rents, $36,000. They got property taxes in Texas are always high, $9,600. Anyway, you can go over this stuff right here. If you want to look at the cash, the monthly cash flow of $900. Basically, that's after, all the expenses, utilities, property management fees, debt service fees. Remember, the debt service fees are included in that property management fee. So I think this monthly cash flow is what we're investing in when you're buying tokens. And like we said earlier, the current loan is $344,000 right here. I like this property, you guys. You can buy in right now at $57 a token. Now, here's the other one right here I wanted to show you is the single family homes. With the third one I'm going to look at, it's going to be a multi-use property. First, let's look at this other one in Palm Coast, Florida, 27 Pillar Lane. The token price is $53.57 right now. The projected annual rate of return is 22%. Rental yield, 22%. So this is looking like this is a high return property, you guys. So same thing, this person, I don't even want to try and pronounce that, transferred the property, his deed, into a new LLC and is selling a portion of the LLC on the Lofty Marketplace. The asset is the only one owned by the LLC. Tokens represent direct ownership in the LLC. And then this owner will also maintain 10% ownership. We can look at the proof of documents if you want to see that. This is a 4-bedroom, 2-bath, split floor plan with a 2-car garage. Let's look at some of these pictures. So obviously this is a 1-level home. Updated on the inside. I like this. Updated cabinets, countertops, flooring, nice surfaces. We don't need to look at all these pictures, but you can get an idea right here really quickly. This is a pretty cool house. I like this. I mean, as a real estate agent, I like this property a lot. Let's get out of these pictures. So you can kind of get an idea right there. What else do we want to know? We can look at these details of the house. 3 bedrooms separate from the owner's suite. So the property has an interest rate only loan of $346,000 with a balloon payment due in 2028. If the owner pays down the loan payments, his equity percentage in the property will increase and the levered rental yield of the investors will decrease over time. Investors are not responsible for the loan payments and have the ability to change the structure via the governance vote, like we talked about. The owner plans to refinance the loan instead of paying it down. This will go to a governance vote amongst all the investors. And then the owner, like I said, was responsible for 100% of the loan payments. It currently is leased on a 1-year lease at $2,800 a month with a nice security deposit. The tenant is his business partner who is subleasing the property as an Airbnb. So you can see the Airbnb listing here. If the Airbnb brings in a higher net cash flow than the cash flow brought in by the original lease agreement, investors will receive their share of the additional cash flow. So basically, if the Airbnb brings in more money, us investors are going to be able to participate in that. If the Airbnb brings in less, though, than the $2,800 a month, the rent will not be decreased for investors. So actually, that's pretty good news here. If they bring in less on the Airbnb, we're still going to be making that $2,800 a month. They have structured this offering like this so investors can receive a consistent cash flow while the property is tested on Airbnb to prevent volatility. That's great. Investors can propose a vote, that's us, to remove the ability for the property to be subleased as an Airbnb. Then we would still receive that $2,800 a month just on the direct long-term lease. So if we decide we don't like this Airbnb structure, it's not making any more money, we can decide to propose a governance vote and roll this back to just a long-term lease. The location is a B rating on niche.com. So basically the investment value is $457,000. The underlying asset price is $455,000. I think they said, let's see, operating reserve of $3,000, annual rate of return at 22%. Annual gross rents at $3,300 a month, or $33,000 a year, I'm sorry, with a monthly cash flow of $2,184. That's what we're going to be participating in at that token price. And like we said, the current loan balance is $346,000. And you can buy into this one, you guys, right now at $53.57 per token. So you could buy 1 token at that. If you want to buy a lot more, you can get a really nice return on this property right now. I think this is a pretty good buy also. Now, let's take a look at the third one. Oh, by the way, my name's Brian Johnson. I'm a real estate broker. I'm also involved in property management. I've been in real estate my entire life. My entire channel is focused on real estate. A lot of my stuff on here is about investing platforms and how you and I can invest at smaller dollar amounts in real estate. So if you like that idea, check out my channel. That's what my content's about. But also I'm drifting off into some other stuff on just regular real estate. I really like that content too because like I said, I've been a broker basically my whole life since right out of college. So I have a lot of expertise in real estate brokerage and in property management. And look forward, and soon I'm going to start doing some live streams where we can just sort of be gabbing about real estate and the market and then these investing platforms, and I can go over some of the properties that I like in these platforms also. And if you like Lofty, in the description below, there's a link. Go ahead and click on that, and you can check these properties out yourself. Now let's take a look at this third one, 1317 South Solano Drive in Las Cruces, New Mexico. The token price right now is $55. This is an 8-unit mixed-use property with 7 residential units and 1 retail unit. So I don't know how you feel about commercial space. Well, commercial space is pretty rough right now, but this is retail, and it's supported by 7 other residential units. So I like that. Let's look at some of these pictures. So it's on a busy strip. They have solar. Is that solar panels there? Someone spent some money on that. You know. All right, these are just basically aerial shots. All right, so here we go. Looks like a fashion gallery, fashion places there, not the kind of place that I would be shopping, of course. Look at that. And then it's got, like I said, the 7 residential units. So this is just a clothing boutique. Looks like seamstress work and that sort of thing also. And then these are going to be much smaller little residential units. So I think we all kind of get the idea of what this is. Good return though. These things can be absolute cash cows. The owner transferred, like I said, on the other ones to a new LLC and is selling a portion of the LLC on the marketplace. It's the only asset owned by the LLC. The owner will maintain at least 10% ownership. And then we can look at the proof of documents. Go ahead and click on that, you guys, if you really want to read detailed information about this. So fully renovated 8-unit mixed-use property featuring 3,800 square feet of space, sits on almost half an acre, 0.44 acre lot. The owner purchased the buildings when they were in ruins, shattered windows, no fixtures. They've just fixed this thing up. The entire corner was an eyesore. Over the course of the year, he transformed the area by collaborating with police and neighborhood organizations. So, you know, there's some risk here. And they basically completely updated this property. It's reminiscent of a 1950s Route 66 style motel, but it's residential units, a prime location in the College subdivision. Okay, I don't know anything about this area. It's zone C2. If you do, leave some comments below. So the property has an underlying loan of $589,000. If the owner pays down 100% of the loan documents, his equity percentage in the property will increase, of course, and the levered yield of investors will decrease over time. We can also change that with a governance vote. There's occupancy. There's also a billboard that makes $1,500 a year in revenue, and he's getting $800 to, looks like a little above $900 per residential unit. It's got a B rating on niche.com for its location. And let's look at the financials real quick. The total investment value is $761,000. And like I said earlier, it has a $589,000 first position loan that we are not paying for. That's being paid by the owner. So you got closing costs, no money in operating reserves. So I'm not really super fond of that. But it is projecting an annual rate of return of 34%. That's really good, you guys, with the combined rental yield and the appreciation. Rental yield of 33% and the appreciation of 1%. Gross rents of almost, $92,000 a year. Monthly cash flow of $5,000 a month. Projected cash flow of $63,000 a year with that loan. That's a pretty good return, you guys, on this sort of an underlying asset value. 34% annual rate of return. I think this is fantastic. And you got a starting price on these tokens right now of $55. We did have a little drop in token price. You might be able to have gotten something a little better there. But this is sort of, it looks like it's been out there for 30 days. All three of these properties, you guys, carry some amount of risk, like investing in real estate always does. But if you've got some money and you want to invest in real estate, maybe you can't go out and buy something yourself yet, but you still want to invest and be a real estate investor. Maybe you have $500, maybe you have $1,000, and it's just sitting there in your bank earning nothing. This is a really, really interesting platform, you guys. I like Lofty. They're super legit. They've been around for a while. I've been investing and watching Lofty for a couple years now, so I really like it. And I think these properties are their newer platform offering where you buy into owners' equity, and they are really leaning into that right now. I know a lot of owners in my area, if they could participate in this, would absolutely do it, and I would invest in those properties and that equity if I could. So I like this idea. I like what Lofty's doing. It's very creative, and it's allowing people like you and I to invest in real estate without having to take on the management hassles, the fix-up hassles, and the late night calls, and then sort of that financial ruin risk. If something happens in your property, you don't know how to manage it, and all of a sudden you need a $30,000 roof or a $10,000 heating system, and you don't know how to do that. That right there, if you're buying a property first time as an investor and you get a $30,000 bill to upgrade the systems because you didn't do an inspection when you bought it, or you didn't pay attention to the inspection, and it can wreck you and you go bankrupt and you lose the property. Well, let's not do that. And if you want to do some real estate investing, I think this is a great way to do it.